As part of any real estate office, you need to have policies and procedures about many different things, not least of all trust money. It's one of the most important policies and procedures that needs to be within a real estate office. With me today to talk about these trust accounting policies and procedures is Chris Wilson from Think Real Estate. Hello, Chris.
G'day, Lucas.
We're going to talk about these policies and procedures. I think we'd all agree one of the most important policies and procedures you will have, purely because of the severity of the actions. In the Property Stock and Business Agents Act, there are only 2 jail sentences. One of them relates to trust accounting. So one thing that the licensee certainly wants to get right. As part of this trust accounting assessment, we are going to go through some of the policies and procedures, not do them in full, but more concentrate on what are the important parts of it.
First of all, where we need to come from is that when we're dealing with trust monies, we're dealing with other people's monies. And because it's not our own, we have no right to use that money or to make decisions about that money. It belongs to a vendor, it belongs to the owner, it belongs to a buyer, or it belongs to a tenant. It doesn't belong to the real estate agent. The other issue we have is the licensee in charge of the office is totally responsible for everything that happens in the trust account. In the end result, in court cases that have been run against agents where money has gone missing, fair trading has held the view that the licensee is fault, even though someone else did the stealing.
We should also mention here that the fair trading have certain guidelines. Some being about advertising. One of the more specific ones they talk about is the Supervision Guidelines.
Yeah, Section 32 of the Property Stock and Business Agents Act sets out that the Commissioner, or now the Secretary of Fair Trading, has the right to set down guidelines on how principals will run their businesses. And 2 of the most important ones of the supervision requirements relates to trust account. In fact, Supervision Guideline 1 and 2 are trust account specific.
Exactly right. So as students out there are going to be going through this project, it's important that we note we're not after pages and pages and pages of procedures here. What we want from you is
that you understand the main bits.
Exactly.
Part of your answer is that the Supervision Guidelines, so Supervision Guideline 1, that there must be a procedure on how the trust money is balanced each day and banked. So a banking procedure.
Daily.
And in some country areas you mightn't be able to bank daily because the bank's 300 miles down the road or 300 kilometres down the road. So you would have a policy that said banking is done every 2 or every 3rd day, or when the amount of money held reaches a certain amount. Now, as long as that procedure's in place, the principal has met the requirements of Section 32, but the principal has to ensure that the staff follow the procedures. So if the procedures are there but not followed, it's a breach of the Supervision Guidelines and a finable offence.
What else needs to be in those policies and procedures might be things like...
Well, the other one of the Supervision Guidelines is number 2, where the principal has to sign off on the trust account every month. Now, in a case that was down in southern New South Wales about 5 years ago, where a property manager took a large sum of money from the trust account, the Fair Trading successfully got the court to cancel the agent's licence and fine the agent. The agent didn't go to jail. It was overturned on appeal because the licensee in charge wasn't in charge of the office when the money disappeared, but the initial court actually cancelled and ruined that person's name. And the reason there they held was that the principal, when they signed off the trust account, hadn't made reasonable checks to ensure that the trust account actually balanced. And that required the principal to do a test audit every month. Take a couple of transactions and trace them through the trust account to make sure that they were done correctly. Now, what arises out of that is the need to have a proper policy and procedure that covers all areas of the trust account. If money goes missing, fair trading will come gunning for the principal. So it's in the principal's interest, and if you're getting a real estate licence, one day you're going to open your own office, it's in your interest to have a full procedure that covers everything that happens in your trust account. How you receipt money, when you receipt money, the details that go on the receipt, which is set by legislation, but it's still in the procedures.
It's in the property
Who
stock.
can sign the receipts? When is the receipt issued? Receipt book's in the office. It's receipted when the money comes into the office. Lots done by electronic transfer, I now know, so you cover how you receipt electronic transfers. If you're doing an auction and you forget to take the trust account receipt book to the auction, and you get a contract with a cheque attached to it, how do you handle that? You need to cover that. The obvious way to cover it is you bring it back to the office, it's a cheque. When the cheque arrives in the office, you receipt it there. You can't receipt it at the auction because you haven't got the receipt book. If the person gives you cash, you've got a problem because under the law, you can't issue an interim receipt. You haven't got the receipt book. The person says, but I'm giving you X amount of dollars. I want something to know that I've given it to you. So the smart thing is you write a piece of paper, the amount of money, and you give it to him. And when you get back to the office, you write the receipt. But you don't give that to the person who gave you the money until you get the temporary piece of paper back.
Otherwise there'd be two receipts.
Otherwise there's two receipts and someone's going to say, you owe me some money.
But there's also a separate problem. Whenever you're accepting cash, particularly for a deposit for a home, you've got to check what your cash in transit insurance may be, because if that goes missing and you don't have that, you're going to be responsible for what's going to be held.
So you need this set down in your procedures. The other things you need to cover is who can sign trust account cheques. Principal's not in the office all the time. Now, luckily, we don't use cheques so much now. We have electronic transfers. Who can authorise electronic transfer? Fair Trading are very serious about this, and they're about to change the regulations where only the principal or the licensee in charge can effect a transfer out of the trust account. It can't be any other member of staff. But if you do have other members of staff doing it, you need a procedure to set out how it may be done.
Even what's another good point is working out if there's an irregularity. How is that handled?
What do you do? If you find, I actually, when I first started in real estate, found an irregularity in the trust account. And I asked a friend who was a solicitor, what do I do? And he said, panic. And I said, what? And he said, well, if you don't do something about it, the finger will be pointed at you. I had to go down to the police station and report it. Lost my job, which led to me coming to Sydney and get another job. So that's another story. But the thing is, you can't ignore it, because if you ignore it, you become complicit in the trust fraud. So if you ever suspect something is going wrong with the trust account, you should report it, and that should be covered in your policies and procedures on how that's done.
So for everyone out there, hopefully that gives you some great ideas as to what you could put in these policies and procedures, and certainly covering off on the main points.
In the assessment, we don't want you to write War and Peace about everything. The headings and what might be covered in your policies and procedures, what we're looking for.
The important parts.
The important parts. So you show us that you understand the importance of protecting trust monies.
All right, I hope that helps everyone out there with their assessment and what you need to complete. Thanks, Chris.
Pleasure.